Hello, good morning and welcome to our Saxo Morning Call this Monday, January 28th. We can start by saying that if last week was the appetizer, then potentially this week could be the main course. We have several critical risk events coming up during the week. As you can see here, we kick off tomorrow with the planned beat votes in the UK Parliament. Again, Theresa May is facing an uphill struggle to get the number of votes that she requires. So again, it could be a strong week or a volatile week for sterling. But then really the big day this week is going to be Wednesday. We got the FOMC meeting followed by a press conference, and already on Friday we did see quite a bit of a spike in the market in risk appetite. We saw the dollar weaken. There was a report out in the Wall Street Journal that the FOMC may move towards adjusting its quantitative tightening, so that did have an impact. I'm going to show charts in a second. And then on Wednesday as well, if you move back to the table or the slide, we can see that the US and China trade talks they begin in high level trade talks begin in Washington. It's been set to last for 2 days. Over the weekend, we've seen the Chinese government or the Chinese central bank fixing the renminbi sharply stronger ahead of these high level talks. Also, the central bank is providing additional liquidity ahead of the Chinese New Year holiday, which begins next week. So I think at this stage the hopes has been reduced somewhat. So the main thing at this stage is probably that they will agree to continue talking. And then just on Friday we have the US job report. As usual, it will be watched very, very closely. And I think probably also just mentioning on Wednesday with regards to the trade talks, we have the extradition notice from US to Canada. US has to make good of that extradition notice on Wednesday, according to reports. So again, that could add a spanner in the works on these trade talks. But the big move on Friday afternoon was basically caused by an article in the Wall Street Journal speculating that the Fed will ease off on its quantitative tightening, because that it seems to have been doing more damage to the global markets than the tightening we've seen in interest rates over the past couple of years. Result of that was basically gold taking off. We moved back above 1,300. We haven't really seen an extension so far over this trading session. So now really is a test for gold whether it can find a bit up here after finding quite strong support below 1280. The euro dollar after testing 113 early in the day finished the day around 114, and that's where we are today. So some dollar weakness also came into the market. Also, I think on Friday was also the day where Trump basically caved in. He reopened the government. Chaos at the airports and plunging popularity basically led to him ceding to the Democrats, reopening the government, but obviously still threatening that it could be closed down again in 3 weeks' time. So we got more coming on that front. But where has that left the other major markets? Well, the S&P, as you can see here, it's still continuing to consolidate. There are the calculations on earnings yields and the 10-year yield on the 10-year Treasury up, coming back close to the 5-year average. So on this basis, U.S. stocks are no longer cheap as they were back in December. But as you can see, we're holding above this 26-30 level. That's probably going to be one of the levels to look out for this week as we meet these different challenges in terms of data and events hitting the headlines or hitting the screens. Moving on to the commodities, the one that's really moving all over the place at the moment because of the unpredictable weather in the US is natural gas. We've had so many gaps now on Mondays that we almost stopped counting. But as you can see here, all the circles, these are gaps higher and lower in the natural gas markets when they open on Mondays, because we tend to have the change in the medium or short-term weather forecast tend to be published over the weekend. And as you can see, this morning we have slumped below $3, basically after some short-term forecasts were pointing towards milder weather across the US Northeast. So again, a very volatile contract. So once again, just highlighting the risk of carrying two strong positions into the weekend again, based on these sudden changes in the market. Staying with commodities in Venezuela, Maduro has basically reined back on his threat to expel US diplomats. That has caused the market some of the tension just to ease in somewhat. As you can see on the chart here, the crude oil market has really struggled this time to build in a risk premium. We have been trading sideways now for the past 3 days. A little bit of excitement to the upside on Friday, but some of that has been taken back this morning. The left chart is the speculative interest in Brent crude. As you know, with the US government shutdown, we have not been able to publish data from US futures markets since December 18th, but Brent is the one that's been, continued to be published. And what we're finding so far there is that since the low in December, there's been a net increase in the net long of 66,000 lots to 203, still well below the records we had earlier last year, above 600,000 lots, so that's 600 million barrels. What we do find, however, is that most of that buying has been short covering. The more than 2/3 of the buying has come from shorts being pulled back, but we haven't really seen any strong buying to the upside, and that does indicate that funds are still hesitant in getting too excited about oil prices at these levels. And I think it also confirms our view at this stage that we are consolidating, and the upside at this stage is limited in Brent crude to between 54 and 55. Just before I go, I'll just once again highlight, just I did on Friday, that this morning call is now available directly in the Saxo Trader for our clients. They can go to the news and research area and then click on the Saxo Morning Call, and that's where it will be broadcasting live here at 8:45 CET every day. And just going to the calendar to finish off the morning, relatively calm today. We got ECB's Draghi speaking before the EU Parliament, but as you can see, all the things highlighted in blue is really a critical week ahead to finish off January. So especially focus on Wednesday with all the different events that I highlighted earlier. So a volatile week is in front of us, and the market will just take it easy probably today as we head up to these major events from Wednesday to Friday. That's it. Thank you very much. Have a great day.